Hey folks, welcome to Verified Investing Alerts, Trade Setups in Action video. My name is Gareth Soloway, Chief Market Strategist here at InTheMoneyStocks.com. In today's video, I want to talk about some shady tactics hedge funds use when they do secondary or when they get or buy secondary offerings of stocks. So this is a very shady tactic. It just happened last week on Recon Technology Limited. RCON. Many of you guys may have seen this stock collapse last week. I believe it was on Friday, an absolute collapse on RCON. The stock traded above $17, ended up closing at $6.24, a massive, massive reversal from the highs. Now, there was no news out that day. Well, that's not true. There was news. They had received a big contract, at least big for them. This is a small cap company. The market cap prior to that day was around 140 million in terms of market cap. So we're talking a tiny, tiny company. And that goes to why these hedge funds can manipulate and kind of do what they want, because these companies, if they're going to raise capital, they don't really have a say in how it happens, meaning that the hedge fund can rule the roost here. And basically what ended up happening was that on Friday of this past week, the stock again gapped up on the great news, which suckered in a lot of average investors thinking it was going to run tremendously to the upside on the contract news. And the stock then collapsed all the way down and again closed at $6.24. And again, the only news out there to the public was that basically they had gotten this contract. So a lot of people, including myself, as I was watching this, I was scratching my head saying, why the heck is this happening? I mean, what on earth is going on with RCON when they had good news and the stock ended up collapsing? Well, sure enough, Monday morning, we found out there was a secondary offering done. And get this, folks, at a price of $6.24. So as a common sense investor like myself, I say, okay, well, why was the secondary done at the exact price that Friday closed? And why did the stock drop then ahead of that news? And the answer is very simple. And this is what comes down to it. It's that these hedge funds, when they agree with these small companies, and remember, this is a small company. They don't have a lot of clout. They don't have a lot of power to dictate the rules. The hedge funds dictate the rules. And the hedge fund says to them, okay, we will do the secondary offering at the closing price on Friday. All right, so, okay. Well, guess what the hedge fund does? The hedge fund slams the stock to get as many shares. So the company wanted to raise 55 million or whatever it was going to be. And the hedge fund says, we want to get these shares as cheap as possible. So the hedge fund then pounds the stock down, probably shorting it, doing whatever they can to pound the stock down as low as they can so that that Friday closing price is as low as possible so that they maximize their investment. Essentially, they take as little risk as possible. So this way, the company gets their money, but the institution has manipulated the share price down substantially to get the price that the agreed upon Friday close is at. So they're getting it at 624, and ultimately they probably shorted a ton of shares to get there. They can use the shares that they're issued, which they're able to sell right away, to cover that short position. All right, folks, and you can see very clearly the drop there and then continued downside because the offering was about 50% dilutive to the shares outstanding. But either way, honestly, 200 MA down here. Let me show my chart again so you guys can see this. But again, I want you guys to be aware that this happens. All right, but this, honestly, I like RCON. They have some really good products that they're making headway in China with. I like it quite a bit at these levels. It might go down to the 200 moving average here, but my guess is this eventually will start to turn up significantly and push back up, maybe as high as, the $10-ish area, $9-10 back to these moving averages. But again, this is just going to show you that these smaller companies, when they have to raise capital, they don't have the ability to dictate the rules, and the hedge funds that they're raising the capital from will dictate those rules. So normally a big company could go to Goldman Sachs and say, hey, we want to do a secondary offering, let's do it at this price, we'll do it below market, but not ridiculous. In this situation, the hedge fund said, hey, we'll agree, but we're going to do it as of this closing price on Friday. And then they absolutely crushed the stock down all the way down to get that offering price as low as possible. So they would get as many shares as possible to give that money to the company here. And basically I mean, it was a no-lose situation for that hedge fund. They did that on purpose. There's no doubt about it. So my point is, again, folks, be aware that these things go on in Wall Street. Are they kosher? Are they legit? No. Are they illegal? That's up to the SEC to decide. I think it's super shady. I think it's super shady that investors that bought early in the day with the news on Friday, ended up, basically taking 60, 70% losses, or maybe are still holding on. But I guarantee you there were people that were buying it on Friday above 17, and it closed at 6 and is now at 4 and change. So I would like the Securities Exchange Commission to make this known and to unveil it, but I don't know if it'll happen, folks. Again, small company, they don't have a lot of ability to dictate, like I said. All right, my job here, folks, again, is to give you guys great analysis as well as help you unmask Wall Street and what goes on behind the scenes. And it's truly my pleasure to give that to you. Come find me on Twitter at Gareth Soloway. Also, come and find me at inthemoneystocks.com. My main service is verified investing alerts. Have a wonderful rest of your day. Take care.